Hi everyone, this is Accountant is Investing channel and my name is Ayana Skaraf, and today we're going to be going through what is market cap and why it is so different from the real worth of the company. So talking about the market cap, also known as market capitalization, also incorrectly known as what a company is worth. So it's very important to understand about the market cap, that market cap is simply price per share is multiplied by all number of shares which was issued by the company, and that's basically what it is all about. It's about price. So it's very important you get this. Price is not necessarily the value. Price is only what you pay, and the value is what you get. So for example, let's say if I go out and buy a car, and let's say I'm buying a Ferrari which had a value of $100,000 and I pay $200,000 for it. So it doesn't mean that the car has the value of $200,000. It just means that I massively overpaid. On the other hand, if I pay for the same car $50,000, it doesn't mean that it's worth $50,000. It just I got it with a huge discount. So what's really important to understand about the stock investing in public market is that market cap is what we actually pay. And what we need to know, which is by the way one of the very important rules in investing, is what it's worth. Another word in accounting is called book value. So once we know what it's worth, then we can take a look at what is the market cap. So then we could have the understanding if we're overpaying for the business which we're planning to buy or no. Even if we are overpaying, which is a very, very normal thing in nowadays world, if you're buying a really, really good company, then for how many times you're overpaying. Just quickly to mention, guys, that for sure there are like such ratios as PB ratio and PE ratio that gives us understanding of those measurements, which by the way we're going to be talking and discussing about in my later videos. So that's the reason why don't forget to subscribe for the channel. So now let's understand the difference between market cap and the book value by using a real example. So we're going to be looking at the Facebook company's data. So as you can see here, the price of Facebook stock is $279 per share. So the very first question that we got is where we have this number is actually coming from. So to understand that, we need to know what is the total market capitalization of Facebook, which is written here $796 billion. So another thing that I need is a total number of shares which Facebook has issued for the whole period of time. So to get this information, we simply need to get into financial sections. Then we choose balance sheet. Then we're going to scroll a little down, and right here it is. Yeah, the total common shares outstanding is 2.85 billion pieces of shares. So now if we divide 796 billion of total capitalization to 2.85 billions of all shares issued by Facebook, then we get our $279. So that's our current price per share. That's how we got it. Alright, so we have understood the way how we got the price per share of Facebook company. However, now what is really important for us to understand if the price which market is offering for us is the right price to buy. And if it is not too expensive in relation to the real net worth of the company. So that's the reason why the next thing for us to look up is the book value per share of Facebook company, which is what we are going to be doing right now. So here in the same section under balance sheet, we have our total assets of 146 billion. And this is the real amount of asset that company owns. And as you can see down below, we have our total liabilities, which is 28 billion. Well, yeah, this is all the real debts that company has nowadays. So now if we just minus this 146 billion of our total asset by our total liabilities of 28 billion, then we get our total equity of the company, which is written right here, which is 117.731 billion. So this is the total book value of the company. So this is the real how much it worth according to the book value, according to the accounting metrics. So in order for us to compare, we would need to know the value per share. So we just simply divide this total equity, 117.731, by total number of shares, which is, by the way, we already know, 2.85 billion. And we're just going to divide it. So this is how we get it. This is how we get the book value, which is $41 per share. So that gives us understanding that the market is offering to us, which is $279. And this $279 per share is almost 7 times bigger amount than it really worth. So here we have a next question coming. If the potential perspective of the company is worthwhile to overpay the seven times. Well, which leads us to another next step, investing analysis, which, by the way, I will also be considering in this channel, so make sure to subscribe. Thank you very much for your attention and have a good one.